Good morning, this is Bloomberg Daybreak Europe. Happy Friday. I'm Tom McKenzie in London. These are the stories that set your agenda. Global stocks head for their worst week since April as Wall Street sell-off continues into Asia. Growing concerns over US inflation adding to investor worries about AI valuations. Japan goes big, approving a $135 billion stimulus package, the largest since the pandemic. The government ramps up talks of intervention to halt the slide in the yen. Plus, Ukraine's president agrees to work on Donald Trump's 28-point peace plan, despite it giving in to key demands made by Russia. So what a day on Wall Street, whipsawed, of course, by the biggest intraday reversal we've seen on the S&P 500 since April. You started the session for the first hour up about 1.9%. You ended down by around 1.5%. The Nasdaq 100 is now down about 8%, close to 8% from its record highs. The S&P is now down close to 5% from its record highs. Inflation concerns, Fed, December, and whether or not there's a pause, and the valuation concerns around AI. No one is able to put a clear pin in exactly what led to the volatility yesterday, at least not from the reading that I've seen. Today, futures in Europe looking to take the handoff then from the bloody session over in Asia, pointing lower. European futures by 1.4% after modest gains of about 0.4 yesterday. FTSE 100 futures pointing lower by 97 points. S&P E-minis, though, a bit of respite coming through when you look at the US futures picture, pointing higher by 0.2%. How much conviction is there, though, given what happened yesterday? Nasdaq 100 futures looking to add just 10 points so far as we build up to the European Open, of course. Let's flip the board and have a look cross-asset. You did see Treasuries bid. Today, Treasuries are relatively stable, but you're back below 410 on the US benchmark 10-year at 408. We get a reminder of just how much division there is amongst the FOMC leading up to that December decision. We had the jobs data for September, of course, showing that unemployment ticked up, but new jobless claims or new jobs added came in higher than expected. 130 on the pound, currently up 0.1% on sterling, with a further survey coming out overnight suggesting and pointing to deep concerns and anxiety amongst UK consumers leading up to the budget next week. Brent at $62 a barrel, currently down a full 1% on the moves around a potential peace plan involving Russia and Ukraine, with all the caveats that involves. And Bitcoin below 86,000 right now, 85,962, down 1.4%. And again, the crypto space and Bitcoin has for many been something of a canary in the coal mine when it comes to the risk-off moves that we've seen more broadly across these equity markets. Let's cross over to Asia right now, bringing Winnie Su in Hong Kong to look at a session that has led to deep losses. Winnie.
Yeah, morning, Tom. It's been quite a volatile week for Asia, and we are ending with a big sell-off in the region. Now, MSCI Asia here down about 1.6% as we headed for the worst week since April. It's still that concern, like you mentioned, around the tech valuations and the uncertainty for the Fed's rate path. And here, leading losses today are the Korean stocks, and the Kospi here is down about 4%, and similar moves that we saw in Taiwan and also in Hong Kong. Now we flip the board and take a look at what's going on with the Japanese market, because in terms of stocks, it's quite of a similar story with topics and Nikkei down, and the tech-heavy Nikkei is actually down a bit more, dragged by that concerns around tech. However, we did have Prime Minister Takaichi approving her first stimulus package, and it's the biggest since pandemic, and that is still weighing on investor sentiment in terms of what this means for the fiscal health for the country. Another key concern for the country, again, is that weakness in the Japanese yen. We are seeing a little bit of a strengthening here, but still hovering around that 157 level against the dollar. And that weakness has prompted the finance minister to warn against that one-sided move in FX and the potential to intervene in the market. And we also take a look at a very interesting chart that I would like to highlight today for that correlation between between the Japanese yen and stocks, because usually we do see the weak yen to be quite beneficial for stocks, as you see the correlation here in the green. But that has flipped into the negative territory in the past few days. And it goes to show how it really is that sell Japan narrative right now, with more concerns in terms of what this fiscal policy would mean for markets and for the economy. Back to you, Tom.
Yeah, the Nikkei down 2.2%. That is really interesting, that dynamic, that weaker yen is not helping out the equity space of Japan, and the fiscal stimulus not doing that either. Winnie Su, thank you very much indeed, joining us out of Hong Kong with the check on the Asian markets. And the sell-off that we're seeing in Asia follows that dramatic reversal then on Wall Street yesterday that we touched on earlier at the top of the show, which saw $2.7 trillion wiped off the S&P 500. Let's get the details with Bloomberg's Valerie Teitel. Val, what happened yesterday?
I mean, the move in the NASDAQ yesterday is what's going to put hair on young traders' chests. Let me just tell you that. A 4%.
That's a lovely image this Friday morning. 4%, thank you, Valerie.
That's what I'm here for. A 4% slide in the NASDAQ in an hour and 40 minutes yesterday. A steep reversal in risk sentiment off the back of no clear trigger, just a reevaluation of NVIDIA's earnings and what this means for the tech trade. A huge U-turn. It was actually the second biggest intraday drop in the NASDAQ since April 2020, going all the way back to COVID. Again, no clear leader. Obviously, we can tie this into the price action around NVIDIA, a steep reversal there. But take a look at the losses, and its rival AMD was down 8%. Some of those memory chip names, Tom, Micron was down 11% in the NASDAQ. Yesterday, only 12 stocks in the NASDAQ 100 ended in the green. The remaining were in the red. Now, there is some good news here, is that NASDAQ futures have bounced just slightly this morning. We're up by 0.1%, but it is looking like now the worst week for the equity market since April. This will be now 3 back-to-back weeks of losses for the NASDAQ 100. And if we look at further price action this morning, I know you just noted we're continuing to see a slide in Bitcoin. That was another trigger for the weakness yesterday. A little like flash crash, should I say, in Bitcoin, down 5% in yesterday's session, sinking another 1.5% in today's trade, eyeing that 85 level. And there's some very nice statistics about the momentum in Bitcoin. 11 straight days of new lows for Bitcoin. That is something we have never seen before in this cryptocurrency. Its RSI, which is a technical indicator of how stretched the levels are, is also its lowest in 2 years. So again, the momentum really is on the back foot here for both the tech trade and for Bitcoin.
That's a new superlative for crypto. 11 straight days.
11
straight days down days of lower lows for Bitcoin. That has been that flashing warning light around risk sentiment, hasn't it? To what extent have expectations around the Fed changed and fed into what we saw in terms of the sell-off? Because we did hear from the Federal Reserve members, of course, a number of Fed officials speaking yesterday, and some of them sounding the alarm then on inflation, including Michael Barr, Beth Hammack and Austin Goolsbee. Let's take a listen, then we'll get your take.
We've got a series of geopolitical and policy shocks that have come in that are masking, in my view, this underlying, the economy's pretty strong, and I feel like eventually we are going to be back to rates can come down a fair amount. But in the near term, I'm a little uneasy front-loading too many rate cuts.
Is there then, Val, a consensus forming, if we put Stephen Miran to one side with his continuing advocacy for lower rates, is there a consensus forming that December is a month and is a decision for this Fed where they stay on hold?
Look, there is a very far from a consensus at the Fed at the moment. We just heard from Goolsbee there. He's uneasy about cutting. We also heard from more hawkish members yesterday, Barr saying that he has inflation concerns. But we also heard some quite dovish things. Fed Governor Lisa Cook saying she's keeping a close eye on private credit. She's worried about asset valuations. Then we also heard from Stephen Miran, as you mentioned, one of the most vocal doves on the committee at the the moment, saying the Fed should be moving towards neutral. And then we heard also from Paulson, who's not a voter this year, but she is going to be a voter next year. She was commenting specifically on the September non-farm payroll release, saying, look, the job gains were in acyclical sectors. That is a precursor to a slowdown. She maybe might be moving toward the cut camp, at least at the FOMC next year. Now, all in the back of this, we still have a few members who were not very sure how they're going to vote in December. One of those is Powell. We're really waiting for some kind of leadership from the big names, but it does seem like we're almost evenly split now between the voters of who is claiming that December should be a cut and who is claiming that inflation concerns are still top of mind and they should be holding in December. One thing about the jobs report yesterday that I think did worry markets is this rise in the unemployment rate. Yes, we had job growth gains beating consensus at 119K, but a tick higher in the unemployment rate now for a third straight month. We've gone since June, the unemployment rate has ticked 1/10 higher steadily each month. We know we're not getting the October release. We know the November release is coming after the December decision. Powell has before labeled 4.5% unemployment as a worrying level, and we've gotten to 4.4 as of December. So again, there is many ways you can view how this Fed is going to react within this data fog that we're still continuing in. We are going to get some more data before they meet, one of which is today, the U.S. PMIs. That could be interesting. And next week, we get the delayed U.S. retail sales. So still some more data to hang the hat on, but it does seem like it is an evenly split Fed for what could be a fractious and quite historical decision in December.
Okay, excellent context for Rout. Thank you very much indeed. Of course, our markets reporter on the details in terms of the Fed expectations and the market rout that we saw on Wall Street yesterday. It continued into the Asian session, of course. Meanwhile, Japanese Prime Minister Sanae Takechi's government has approved the largest round of extra spending since the pandemic. Funds will be deployed to address the frustrations of voters, but it's a package that may unsettle investors scrutinising the nation's finances. Let's bring in Bloomberg's Paul Jackson, who joins us out of Tokyo. Paul, talk us through the details then of this sizable and chunky stimulus plan.
Yeah, it's a sizable package. She could have gone bigger. It has inflated in the last few days. We were seeing smaller numbers earlier in the week. But the Prime Minister's had a very difficult balancing act. She's got to come up with a package that looks like she's helping those voters so frustrated about inflation and the cost of living crunch. But at the same time, she can't go crazy when investors are worried that maybe the Takaichi is some kind of Japanese equivalent of Liz Truss rather than Margaret Thatcher. Now, just in terms of the numbers here, there's a lot of numbers that have been released today. I think the one to zoom in on is the 17.7 trillion yen that's going to be financed through the extra budget. That gives us a feel for what the fresh spending is, the new spending. And if we look at how much Liz Truss unveiled that time with the package there, all the measures she came up with were about 7% of GDP at the time. Of course, you can slice and dice it in different ways. That would be equivalent to about 44 trillion yen. So, 17.7 sounds a lot more reasonable than that, doesn't it? And we've been in touch with S&P. They said this will mean a deterioration in Japan's finances, but ultimately it's on the margin and shouldn't impact their credit rating at this point.
Okay, loving the comparison with Liz Truss, how it compares and how it doesn't compare. Meanwhile, all of this happening, of course, Paul, as Japanese officials are threatening to intervene, and pretty clearly so, in terms of the language, around the yen. We see the yen strengthening today, up 0.2% and 157.09. Does that suggest that this is working? What's going on around intervention concerns?
Well, it hasn't been a great success. We haven't seen a strong strengthening, but maybe it is just stemming the moves. Earlier in this week, the finance minister Katayama met with Bank of Japan Governor Ueda, and after their meeting, she didn't even mention the yen, and it was looking like pretty low level interest in what's going on with the yen. So what we've seen this morning in the fact she said the key phrase that they will take appropriate action if needed, and not only that, she's gone one step beyond, and she's actually said intervention is an option. That's pretty unusual for a finance minister to go that far. So I think what we've seen here is finance minister really turning up the dial from around 6 to very close to 10 on the volume level. And one of the parallel that may be worth drawing here is that the last time Japan intervened, it was late on a Friday night before a long holiday weekend. And just reminding you that there's a national holiday in Japan on Monday.
All right, really good point, Paul. So we're on tenterhooks if that intervention does come through based on recent history. Paul Jackson, fantastic update out of Japan on the fiscal stimulus, of course, and the intervention rhetoric that we're hearing from Japanese officials. Paul joining us out of Tokyo. Thank you. Here's what else to think about today. 7 a.m. UK time, then those retail sales out of the UK dropping as all the surveys suggest that the UK consumer is feeling pretty morose in the lead up to next week's budget. We'll also get global flash PMIs starting with France at 8:15 a.m. We'll break those for you. And at 8:30 a.m. UK time, Christine Lagarde, of course, of the ECB will be speaking, so we'll be taking that for you as well. Later on in the day, we'll get some rhetorical fireworks here, potentially. Trump and Mamdani, of course, the New York mayor-elect, will be meeting, and so we'll be getting pictures of that for you, hopefully, and bringing that conversation and that meeting to you. That could be one to watch. Grab the popcorn. You can get a roundup of the stories you need to know as well to get your day going in today's edition of Daybreak. Of course, terminal subscribers can go to DayBgo on the terminal. The market rout is, of course, part of this morning's analysis, as well as what we're seeing in Bitcoin, oil, and the conversations around Ukraine, Russia. Coming up, talking of which, President Zelensky says he will speak with President Trump about the latest Ukrainian peace plans drafted by the US and Russia. Is there any real traction here? The details on that are coming up. Plus, later in the show, I'm going to be joined by the CEO of the satellite company Iridium Communications. We'll discuss the growing number of GPS jamming incidents around the world. Stay with us for that conversation. This is Bloomberg.
I've settled 8 wars. I have 1 to go. You know what that one is.
We're going to continue to look for opportunities to negotiate. I think the real challenge was President Trump and Secretary Rubio determined that there was a lot of talk from the Russians, but not, any change in their position.
I thought that was going to be my easy one because I have a good relationship with President Putin.
They don't respect the law, but they really respect the United States. They respect President Trump. I really think that President Trump can push Putin to negotiations.
President Trump has taken certain steps. He's, done the oil sanctions. He was considering Tomahawk missiles.
But I'm a little disappointed in President Putin right now. He knows that. I thought that was going to be the easy one.
President Trump, as I've said so many times, holds all the cards. I mean, there are more, there's much more he can do. There's a pending bill in the Congress that would, I think, be impactful.
So, the US and Ukrainian presidents and the US ambassador to NATO on the state of negotiations, of course, to end the war in Ukraine. Ukrainian President, meanwhile, Volodymyr Zelensky, says he has agreed to work on a peace plan drafted by the US and Russia and expects to talk with President Trump in the coming days about those proposals. Markets are reacting to the first day of a new US sanctions against Russian oil. Those are kicking in as Ukraine receives an official draft of the latest peace plan. Let's bring in Bloomberg's chief Europe correspondent, Oliver Crook, who was recently, of course, in conversation with the Ukrainian leader in Kyiv. So a very diplomatic reaction from the Ukrainian president, Ollie, to these proposals that look challenging, to say the least, for Ukraine.
Yeah, I think challenging would be a sort of modest way of proposing and suggesting what we've seen from the U.S. administration and what they've brokered with the Russians. And we should say, though, that this is sort of Zelensky's approach ever since that catastrophic meeting in the Oval Office back in February when Zelensky says basically how high. He has learned from that meeting in the most difficult possible way that you never want to be perceived to be the impediment to peace or the impediment to an American plan, even if that plan includes the following, which is what we understand from the early stages of what we've seen from this plan, which would be ceding all of the Donbass region to the Russians by the Ukrainians. So these are even parts of the Donbass region that the Russians have failed to take control of over 4 years of bitter warfare. That would go to the Russians. There would be also some very sort of strict and very difficult requirements post-war, potentially about whether there could be international peacekeeping forces within Ukraine from other countries. Basically, that would be forbidden. There would be also a reduction in the size of the Ukrainian military, basically, according to some reports, halving the size of the Ukrainian military. There would also be ultimately down the line sanction relief for the Russians. And again, the question is going to be, and has been since the beginning of seeing this sort of plan, is what are the Russians willing to give in exchange for that? From what we understand so far, from what we've seen from the plan, basically to cease the aggressions within Ukraine. And again, this sort of promise to not reinvade in the future and not reinvade the European continent more broadly. This is very difficult for the Europeans and for the Ukrainians to accept. That being said, the approach has been, okay, President Trump, we are willing to engage with this plan. We're going to have this conversation. We expect Zelensky to get into the room with President Trump in the future, in the next couple of days, to talk about this. But again, we should say these are the sort of very opening indications of what is still a very early draft, so this may evolve into the future. That being said, as a starting position for these negotiations, this is not something that brings any warmth or relief to the Ukrainians or the Europeans.
Oliver Crook, our chief Europe correspondent, joining us out of Brussels. Ollie, thank you for that update. Coming up, switching focus to the UK, a closely watched index of UK consumer confidence falls on every measure. This ahead of the government's budget, of course, next week. The details are on that are coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's briefly check in on the markets after the rout that we saw on Wall Street yesterday, of course, with the Nasdaq 100 closing lower by 2.4% and the S&P 500 closing down by 1.5%. Today, the US futures picture is looking slightly brighter, maybe a bit of a reprieve after the whipsaw of yesterday, currently pointing higher on the S&P evenings by 0.3%. The pound up 0.2% at 130. Oil prices in focus as those US sanctions on major Russian oil producers kick in. Currently $62, below 63 on Brent, down 1%, and Bitcoin below 86,000 right now, down 1.8%. Now some other stories making the news. On that oil story, US sanctions then coming into effect today. They could leave nearly 48 million barrels of Russian crude at sea. Dozens of tankers have been scrambling for alternative destinations as Indian refiners seek replacement supplies and book oil tankers for cargoes from the Middle East. And a closely watched index of consumer confidence in the UK has fallen on every measure. Research company GfK says its overall confidence level fell 2 points in November to -19. This comes with UK Chancellor Rachel Reeves expected to unveil a range of tax hikes on November the 26th. And the UK will introduce a fast-tracked route to residency for those earning more than £125,000, allowing them to apply for indefinite leave to remain after 3 years. The move carves out exceptions to tougher new immigration rules in a bid to retain top talent while tightening the overall system. And a new report says Brexit has caused almost twice as much damage to the UK economy than estimated by official forecasts. It shows leaving the European Union has cost the country between 6 and 8% of GDP per person over the last decade. The research from a group of experts, including a senior Bank of England economist, has been presented to the Office for Budget Responsibility. Coming up, G20 tensions flare. That's as South Africa and the US spar over what participation really means. More on that next. This is Bloomberg. morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Friday. These are the stories that set your agenda. Global stocks head for their worst week since April, as Wall Street sell-off continues into Asia. Growing concerns over US inflation, adding to investor angst about AI valuations. Japan goes big, approving a $135 billion stimulus package. That's the largest since the pandemic. The government ramping up talk of intervention to halt the slide in the yen. Plus, Ukraine's president agrees to work on Donald Trump's 28-point peace plan, despite it giving in to key demands made by Russia. Let's get to the markets right now. And the challenge session over in Asia, the Kospi at one point was down more than 4%. That has moderated to some extent. But the context when it comes to the sell-off on Wall Street yesterday, the biggest reversal that we've seen, intraday reversal that we've seen on the S&P 500 since April, a reversal of 3.6%. The S&P 500 is now down about 5% since its record highs in October. The Nasdaq 100 is down about 8%, close to 8% since its record highs towards the end of October. Today, though, the US futures picture is looking modestly brighter. S&P E-minis pointing higher by 0.2%. Nasdaq 100 pointing up by 0.1%. The European session will be challenged. Futures here pointing lower by 1.5%. And the FTSE 100 in the UK set to drop a full 100 points. That is the picture right now. Let's flip the board and have a look cross-asset. Treasuries were bid yesterday. Today, Treasuries are stable at 408. The pound is gaining 0.1% at 130. Brent is falling 1% as those US sanctions on Russian crude producers kick in. Below $63 a barrel on Brent right now. And Bitcoin crossing below 86,000. The cryptocurrency has been something of a canary in the coal mine for this risk-off sentiment. Today, in the session, down close to 2%. Now, to the Asian session, where the Kospi, as I've mentioned, leading Asia stocks lower as a renewed tech sell-off and doubts over AI valuations weigh on sentiment. Then let's bring in our Asia Markets Executive Editor, Paul Dobson, who's across all of this for us. Paul, what do you make of the moves that we've been seeing in Asia? How much of this is tied to concerns about valuations and about the AI theme running out of momentum despite the blowout earnings from Nvidia?
Yeah, good morning, Tom. Well, that's clearly one of the disappointments because the Nvidia earnings on the surface at least looked to be good, and the market initially responded very favourably to it. The fact that we weren't able to hold those gains even after that does send us a fairly worrying signal and for the outlook for the rest of the year. And if you look at the Asian market complex, you can see it's definitely the tech-heavy gauges that have come under the most pressure here, because the Kospi being the poster child for a lot of that. Troubling indeed is the fact that we don't really have a very good reason or explanation for that reversal that we saw in the US markets you were describing. Yes, Bitcoin came under some more pressure again. Yes, that has been a leading indicator, it would feel, sort of by 30 minutes or whatever, for a lot of the rest of risk sentiment in markets in recent days. But no, there was no sort of real obvious catalyst. And yet there we are down again. And you know what the concerns are. We've been rehearsing those arguments now for 2 or 3 weeks about the valuations, about the market, can investors, can governments afford to pay for all the chips that are being booked in advance? And will they be profitable before they're sort of superseded by the next generation of technology as well? Those are the worries. And that's why the market is really having a little bit of a crisis of confidence right now.
What stops the rot then, Paul?
So I think that there are possibilities that the rot could come to an end. Today, in the US, we have options expiries. We've got the VIX at elevated levels. So that's a worrisome spot that we've got to come over. What we won't have is much support from the Fed based on everything that we've seen so far, and the fact that we're still in this kind of data fog. It's pretty clear that the Fed isn't going to be coming in with another cut in December, but maybe next year, maybe that outlook will change. We'll watch how the data unfolds from here. What you do have, of course, is a very stimulative backdrop from the US economy, from the Trump administration, you know, kind of still with plenty of feel-good factor behind it, and 100,000 dip buyers waiting to get in there at the right moment, trying to time that market, still wanting to come back in. You know, that's what the pattern that we've seen all the way through this year. And there are plenty of people talking about the idea this is just a healthy correction and looking for those entry points. So we did get a test of that. Didn't test and fail yesterday, probably you could describe it as. But I would not be surprised if at some point we get to a point where we start to stabilize and then you start to see investors coming back in again, because they like the AI story is still a good story, right? It's still very promising. producing kind of industrial revolution type narratives that people can latch onto. And the more that you can see that coming through and showing up in the sort of results, the more people will jump on the bandwagon again and want to rejoin the trends.
OK, we'll watch for those dip buyers then. Asia Markets Executive Editor Paul Dobson. Paul, thank you. Have a great weekend. Let's get to a line crossing the terminal. In the last couple of minutes, there's a redhead on the terminal around the French-based and Paris-listed waste and water management company Veolia, agreeing to buy the US firm Clean Earth for $3 billion US from Enviri. So that line crossing in the last couple of minutes. The waste firm Clean Earth to be purchased by Veolia for an enterprise value of $3 billion. Veolia stock on the Paris exchange is up about 9% year to date. Now, there has been a war of words between South Africa and the US over the G20 summit. It has so far been marred by a diplomatic dispute between the two nations over what constitutes participation in the conference.
We have received notice from the United States, a notice which we are still in discussions with them over, about a change of mind about participating in one shape, form or other in the summit. So the discussions are still ongoing.
I saw the South African president running his mouth a little bit against the United States and the president of the United States earlier today, and that language is not appreciated by the president or his team. The ambassador or the representative of the embassy in South Africa is simply there to recognize that the United States will be the host of the G20. They are receiving that send-off at the end of the event. They are not there to participate in official talks.
Well, let's go to Johannesburg now for more on this with Jen Tambasaja, Bloomberg's chief Asia Africa correspondent, I should say. Jen, what is the latest on this spat? What underpins this spat? Running his mouth? I mean, my goodness. What is behind all of this?
Yeah, it really is, Tom, as you were saying, a war of words, it seems like, and really sort of at this point in time, as we get ready for the G20 summit to officially kick off, seeming like it is the focal picture. We were actually in the room last night when President Ramaphosa was standing next to Antonio Costa and also Ursula von der Leyen, seeming to at least focus in on their trilateral relationship and the importance of that relationship. And then we started hearing some indication from President Ramaphosa that it seemed like at the 11th hour, the U.S. was potentially going to participate in some fashion. Our understanding, though, that it is in fact potentially an official, a U.S. official that will be there for the official handing over of the G20 to the U.S., which of course is going to be holding the presidency in 2026. But really, it is sort of overshadowing a lot of the excitement that's been here over the past few days as we've had this Business 20 summit, the B20 summit, and many people were focusing in on the fact that even despite the U.S. Leader not being present here, there still is a lot of unity that they were at least trying to at least put forward for the most part, in cooperation and unity on the fact that many of these countries do share a number of priorities. But it's seeming like still, despite President Ramaphosa not wanting to make this about the bilateral relationship between the U.S. and South Africa, it is seeming like that is still a part of the discussions. The big question that we have here is what is going to be the ultimate outcome of the G20 summit. We reported earlier in the week that the U.S. had said, had to a certain extent threatened South Africa with coming up with a declaration, a joint declaration at the end of the G20 summit, because the U.S. has explicitly said they are not on board with some of the priorities that South Africa has made for this G20 summit. So what, if any, consensus will we see at the end of the G20 on Sunday? And then what does it mean for the U.S., which is holding the presidency next year?
OK, Bloomberg's Jennifer Tabasaja on the ground for us at the G20 in Johannesburg. Jen, thank you for that update. Jen will be speaking exclusively with the CEO of Business Leadership South Africa. That's at 9:30 a.m. London time. Meanwhile, President Trump has called for a group of Democratic lawmakers to be put on trial and even face the death penalty. after they released a video telling the military and intelligence community to disobey orders that would break the law. In a post on Truth Social, Trump described it as, quote, seditious behavior at the highest level. The Democrats who appeared in the video called on Americans to, quote, condemn the president's calls for our murder and political violence. Switching focus to Europe's most valuable company, ASML. Shares called lower by 4.2% on Tradegate versus the Amsterdam close. Not a big surprise given the sell-off on tech that we saw yesterday in the Rout and the Nasdaq 100, because, of course, we do see that often a linkage between any pressure or any upside when it comes to the tech theme in the US, and ASML is caught up in the drift. The stock is up about 33% year to date, but it's called lower, pretty significantly lower today. Again, the most valuable publicly listed company in Europe. That is a stock for you to watch in the session today. Now, when President Trump rolled out global tariffs in April, economists braced for the worst, including higher inflation, of course. But so far, the price hikes forecast have yet to materialize. Bloomberg Originals has been investigating why.
Credit where credit's due, President Trump made a big bet that the US had a magnetic appeal, and that would enable him to get a better deal from US trade partners and companies that want to do business in the United States. On the evidence of the last few months, that bet is playing out pretty nicely. Economists don't agree on much. One thing they do agree on is that free trade is good and that tariffs are bad. For a moment, Trump escalated US tariffs on China all the way to 125%. If you plugged the US tariffs into a model of the global economy, what it said was that there was going to be a really significant drag on growth, and there was also going to be a significant upward impulse to prices. But when we look at what's happened to inflation over the summer, it's not come down, but it's not come up either. Why is that? It's because US importers and foreign exporters saw the Trump tariffs coming, and they rushed to front load shipping to the United States before the tariffs could come into force. One thing that's happened is that we've gone from a lot of unexpected bad news concentrated on a single day to a series of country-by-country deals. There's something of a Swiss cheese of exemptions and carve-outs. The trade war is a drag, but it's not the only thing which is happening. We've got tax cuts with Trump's one big beautiful bill, and we've got a bonfire of regulations which is stoking the animal spirits of US businesses. We've also got the artificial intelligence boom and a huge amount of investment going into data centers. Tariffs are having an effect. China's exports to the United States are way down relative to the historical trend. So, who pays for the cost of tariffs? Despite his well-known love of gold, the president is not an alchemist. He can't make something from nothing. That money has to come from somewhere. All of the evidence so far suggests that in the end, the bulk of it is going to come from US businesses and US households.
Well, subscribers can watch that documentary right now on the Bloomberg terminal and on Bloomberg.com. Coming up, we're going to discuss the global spike in GPS jamming incidents with the CEO of the satellite company Iridium Communications. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, you may remember that back in September that a plane carrying the European Commission President Ursula von der Leyen was affected by GPS jamming. Data suggests there has been a sharp rise in the number of GPS jamming incidents since early 2022. To get a take on this and the broader industry. Let's bring in now Matthew Desch, CEO of the satellite company Iridium Communications, which compiled that data. Matt, just talk us through the kind of the spike that we've seen then in GPS jamming, and do we put most of the blame then on Russia for these incidents? What's the significance and what's the historical context?
Well, GPS has been around for many years, and unfortunately, it's the core of all of our digital systems right now. We know it navigates us to place, but people don't realize that your cell phones wouldn't operate without it. They wouldn't connect to a cell tower. Your data centers wouldn't operate. The stock exchanges wouldn't operate. But GPS is a very faint signal from space, and unfortunately, it's kind of easily jammed and spoofed and other things. So, you know, we invented a technology that's on our network that's a fix for that.
Well, talk to us about what that technology is, Matt, and what kind of appetite you're seeing then from consumers and your customers.
Yeah, with the rise in most people know Iridium as a communication company, of course, a personal communication company. We've been in operation 27 years, but we realized our network had a very strong signal that if we sent timing information through it, we could be able to be a reference signal, an alternate really to GPS and Galileo kind of systems. And with the acquisition of a company called Satellus last year, we now have the first truly global answer to GPS jamming and spoofing, and it's going into ships now, it's going into cell towers, it's going into many things. And now that we've miniaturized the technology to a tiny little chip, you can go even into consumer devices and many other things. And so, you know, unfortunate jamming instances like the one you experienced, those things are going on across Europe. It's certainly around Ukraine, around Asia. They're increasing in frequency because people realize how much of the world depends on timing from GPS, and they're looking for solutions right now.
Are we closer, Matt, then, to given this technology change and what you're offering? Are we closer kind of to an environment where most of us will be getting direct satellite to smartphone connections? Where are we in that journey? What are the opportunities there?
Well, that's another area of growth. I mean, space is quite exciting right now with all the investment going on. Many of us are working to innovate to, instead of making connections to purpose-built, expensive, large devices, we're looking to embed our technology from space straight into smartphones or into all the Internet of Things devices that people have that track animals, monitor assets, vehicles. You know, with the world going autonomous with vehicles and drones and that sort of thing flying around the world, you can imagine you want to do that inexpensively, and you also want to protect where those locations are. So a number of us are investing in that. Iridium is delivering what we call Iridium NTN Direct. We have mobile network operators who are signing up to roam onto our network when you're out of cell phone coverage. A lot of people don't realize cell phones only cover about 10% of the Earth's surface.
Oh, just 10% of the world's surface. Are you overly reliant on SpaceX and Elon Musk to get your satellites into orbit, Matt?
Well, we were one of their first customers, and in fact, one of their largest commercial customers. Fortunately, our network, our second generation network, is in space. It's one of the reasons why we're so profitable and generating so much cash right now, because we're not having to launch new satellites. In fact, we have a fairly new network right now with a long life ahead of it, and fortunately, it's very programmable. And so that's how we're developing standards-based 5G standards directly into our satellites, so we can talk to the devices that people own and enterprises depend upon.
Okay, Matt Desch, CEO of Iridium Communications. Thank you for taking the time. Let's switch focus to what's happening in the AI space then. More updates, of course. OpenAI partnering with Taiwan's Foxconn to design and manufacture hardware for data centers. It marks the latest move by OpenAI to meet its growing need for infrastructure to support AI systems.
To keep pushing the frontier, We need to build these new types of AI infrastructure hardware at scale, and I'm excited for that to happen in the US and with Foxconn. Foxconn's experience building complex infrastructure and hardware at massive scale makes them the ideal partner for this, and I'm looking forward to exploring together what this can look like. We'll share insight into emerging hardware needs across the AI industry, and Foxconn will use that to design and prototype new equipment that can be manufactured in America.
Okay, that, of course, the CEO of OpenAI, Sam Altman, on that tie-up with Foxconn. There's a lot more coming up. Stay with us. This is Bloomberg.
I think it is incumbent upon us to move monetary policy closer to neutral levels where it's no longer exerting such restriction on the economy. Because if we don't, then that restriction on the economy itself will contribute to further cooling in the labor market that I think from these levels would be most unwelcome given the inflation outlook at hand.
The Fed's Stephen Miran once again making the case for lower rates as the division we know remains pretty entrenched across the FOMC in terms of whether or not to go in December. We had the jobs data, of course, yesterday, which was pretty mixed in terms of the unemployment rate ticking up to 4.4%, but an increase coming in higher than expected in the month of September in terms of jobs added. The volatility, though, was there. The fear gauge and the VIX moved sharply yesterday to 26.42. You can see that marked here on this chart. That is the highest that we've seen since April. We have to go all the way back to so-called Liberation Day and, of course, the surprise implementation, or at least announcement of those tariffs by President Trump to get the kind of moves and to get the kind of highs that we've seen in the VIX. And again, breaking through 26.42 yesterday. The fear gauge, as we saw that sell-off and that reversal particularly pronounced on the S&P 500, which started with gains of 1.9% but ended down 1.5%. Let's flip the board and have a look at one company that our team at MLive, Cameron Christ in particular, is spotlighting as the best gauge of that AI momentum theme. And this is Microsoft. He says it's actually a better gauge than Nvidia in terms of getting a sense of what is happening in terms of the AI theme. And he's pointing out that there's been this double top in Microsoft. It hasn't managed to break out, getting to these levels, and then coming back down again. That's happened now twice. He says that does not bode well for Microsoft's prospects and arguably for the broader AI theme, and that is one to watch in his view. Fed Governor Stephen Miran, talking of whom, is on surveillance at 1:30 p.m. London time, so make sure you tune in for that interview. The opening trade, though, is up next. This is Bloomberg.